see what we have so far. So far, one. What surprised us the most about the results and with the dramatic increase in coverage? So we didn't put that much emphasis on the significant increase in coverage that we managed this year. Last year, we covered 140 asset owners and asset managers. This year, it was 404. So we dramatically increased the coverage there using largely the regulatory disclosures in the US, these NPX forms. I think what surprised me the most was that our distribution was basically set already last year. We saw BlackRock, Vanguard, et cetera, towards the bottom last year, and that sort of was the full range. I was surprised at the number of US-based asset managers who get a lot of, who, at least from the European perspective, are looked at as fairly not sustainability oriented. I was surprised at the large number of those who we assessed on the basis of the regulatory forms, regulatory voting disclosures, that scored in the second or third or even top quartile. So there was much more variation than you would think if you only look at the big three or the largest passive managers and really think that that generalizes to other, all US-based asset managers. I don't know, Siyana, if you have any surprises.
I was surprised by the size of the gap between asset owners and asset managers. Now that we have broader coverage and more asset owners and more asset managers, it's actually like it's glaring, the gap between the types of investors.
Good, thanks. Any other questions? To provide an example, I use exactly. So could you provide an example of how you're using routine proposals? So routine votes. We would, given as a manager who's participating, we would, for example, vote against a board member with responsibility for sustainability if the company doesn't have robust targets. Would this come through as a plus? Indeed. So due to the partnership that we have with Ethos, as well as the additional benchmark organizations that provide this list of flagged votes, we have this composite list of both shareholder proposals and management proposals where a given board member, majority action is a particularly kind of radical proponent of this approach, but there are others as well, the IGCC list, other lists that then allow investors to flag, okay, we're voting against Helge Lund because BP's backtracking on this topic. So we would see, okay, this is a sustainability relevant board vote versus a board vote in any other case. And we would use that as part of the expert benchmark. So all of those investors that voted against Helge Lund in this case, they would be split towards the sustainability end, as Siyana mentioned, in terms of the partitioning. I hope that's clear. And then we have one other question on what has been the response from US asset managers thus far. So it depends on where they're scoring. We do have several of the bigger ones that have set up accounts, downloaded their scorecard, and are aware of the ranking, but haven't yet reached out to necessarily critique us or to critique the methodology, but are just kind of passively acknowledging it. No one has been too dramatically reacting to the results so far in terms of really mobilizing against us. I think there's a lot of other topics on in the news right now. We are curious to see as we expand this, both in terms of giving more insight into how the different voting policies shake out as voting choice moves forward in the US, but also looking specifically into other aspects of voting. So given our methodology, we can apply that essentially to all types of votes. As we start to look at more governance topics, we'll be interested to see the correlation between those that are active on sustainability, how active they are as voters on governance topics as well. There's one other question, a really good question about expected correlations with Article 8 and 9. So it's a really interesting open research topic, which we haven't been able to address yet, simply because some investors are disclosing their votes at house level, where they then say, okay, this is how we voted across all of our different funds. Some investors then group their voting records by fund, so then we'd be able to check that more. What we do know from previous research is that there's not as much overlap as one might hope or expect between a sustainable fund and sustainable voting, and that there can actually be one house policy which is then applied across all funds, that they don't go through the actual kind of administrative effort of having specific policies for specific funds. As we've actually gone through the data and filtered that out and realized, okay, some of the larger houses have distinct policies, then we've been able to look at what is the gap and what is the jump from the climate policy of Northern Trust versus Northern Trust itself. So we'll be sharing some of those insights in the coming weeks, but you would expect for those that have sustainability funds under Article 9 that they are also voting in that way. We are at time, but we would be happy to answer any other questions now or via email after the call. If I failed to mention at the beginning, we will share also the slides with webinar participants today and look forward to staying in contact. No more questions? I guess I will close it out. Thank you. Have a nice day.